What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit the subscribe button if you're new and a thumbs up button if you're returning. Happy Monday. It's actually a holiday here in the United States, but there's no holidays in crypto. So we're going to talk a little bit about where we're at, the kind of looming support levels of Bitcoin. We're going to talk a little bit about EOS as it relates to its mainnet launch. Look at what's going on in the overall ecosystem. And then I want to show you a little experiment that I did that hopefully will help you make better decisions about what sort of coins and purchases you may make sooner, later, or at any point in your investing or trading career. As always, none of this is professional advice, and I hope you all had a great weekend. Well, let's kick it off. I'm actually looking at the BitMEX Bitcoin chart today for anybody. Most people don't trade on BitMEX. I shouldn't say that. While many people don't trade on BitMEX, they have by far the most volume, and often BitMEX has the it's a very leading indicator, like by a matter of minutes. But I find that the price action on the BitMEX chart is really helpful to follow, as opposed to something like GDAX or Bitfinex or Coinbase, just because the volume is so much bigger and you can really see the smoothness even when you get down to the smaller time frames. We've talked about this. And the big question that's looming is, excuse me, when does this glorious price reverse? And last week I had a chart now on Bitfinex, and the way the triangles were drawn last time, this looked a little bit lower, but if you see, I'm just going to drop myself for anybody who's very interested. The top of this buy zone, right around 7,068, bottom right around 6,800. Now on Bitfinex or GDAX or Coinbase or wherever it is you buy your crypto, or Gemini, it may be a little different by 20 or 30 bucks, but that's kind of the area. Now, what that really is representing is, one, this bottom of this triangle, which connects these the February low with the April or late March, early April low. And this is that trend line. Now, trend lines, I'm not sure are the strongest indicator on a chart. They don't necessarily hold the best strength. It's more of just kind of a guide. But what we do have is this whole area, this kind of choppy area between the end of March and early April for about 2 weeks. Went up and down, up and down. There's a massive amount of volume. If I turn that on, you can see that this is just a very, very highly traded area. And then you scroll back, there's also a previous big volume resistance area back in, what is that, November of 2017. So there's a whole lot of action, I should say, a whole lot of support in this area, which is why I have this green box drawn. Now let's talk about strategy as it relates to this price bouncing, if it does in fact bounce. What I would assume, what I'm planning on, is that it comes down, it goes into this box, and then it bounces out of this box, whether it may be a dead cat bounce or it may be a full reversal up to the top of this triangle, and then it comes down. And then I think that we may be in for some, what they call the hurt locker. But we'll see. We'll cross that bridge when we get to it. Fingers crossed. We're staying optimistic here, staying positive. But in the meantime, I think that there is money to be made in the short term, just based on how much previous support and volume there has been. So what I would do, or what I will do, is I would probably layer a bid up at the top of this box. I would not use leverage on this trade for anybody who's thinking about it. You do you, but I don't think that this is a very good trade for leverage. So I'd probably start the first one right around the bottom of this big green bar. Move myself down so we can see all the prices. I think the first would be right around 7,000, give or take, probably right around there. I think that would probably be a good level of support, maybe a little bit above that, because you're going to get a lot of people that are trying to outsmart the psychological levels of 7,000. That would be my smallest bid. The next one would be right in the heart of this. So let's call it 8,900. That would be a little bit bigger in terms of how much money I'd be willing to deploy. And then the biggest would be right at the bottom, which would be 68. yeah, I'd say like 68.10, give or take. And that would be the largest of the three. And if it made it all the way down to those three, great. Now I would expect at that point for it to bounce, and hopefully it can make its way through that trend line and get back into the triangle. If it couldn't, I would sell it as soon as it comes back up and it doesn't make it past that trend line. Or I would have a stop loss right around 67, probably 67.20-ish or something. I would keep it pretty tight because, you know, if it's getting to the lower end of this, I think it's going to have a really hard time making like a full out reversal. It may have like some sort of reversal, but it won't be a long lasting one. And at that point, I'd rather just be out of it. So that's how I'm going to do it. Now, in terms of my overall portfolio, I'm not going to deploy a huge amount of money on this, perfectly honest. Like, I'm not going to take my war chest and try to make something happen on this. Obviously, I still have all my holdings that are just, you know, locked away somewhere that I traded out. And so I have no problem with all that. It's all money that I don't really think about. You know, coins, anything could happen to it. This is kind of more active trading, trying to capitalize on shorter term opportunities. I do not think that this is going to have like a full out reversal. And I also don't think it's going to act the way it's acted in the past. If we do get a reversal at some point in the future, I think it's going to be more of like a slow grind, you know, that eventually starts to come up as opposed to these big V bounces that just shoot it back up into the stratosphere. So with all that being said, that's what I'm going to do for myself, for Bitcoin. I think that a lot could be said for both Ethereum and for Litecoin on the USD charts. Now, if you do Ethereum versus Bitcoin or Litecoin versus Bitcoin, the charts look different. But when you're comparing it against USD, I think all of those coins will fall into this basic dip. Now, like I mentioned last time, if this does in fact happen, I will probably switch it over to altcoins, but the initial buy will be in Bitcoin and the altcoins won't really happen, or the buy wouldn't happen until I saw it get back into this triangle and there was good volume pushing it up. Then I would probably move it over to altcoins, ride that as best I could, scalp it out, and do that sort of thing. Now, if you're listening to this and you're thinking, wow, that sounds really complicated, I'm not a trader, I think that the best thing you can do right now is probably nothing. I do not think that this is a very good time to be buying if you're a long-term investor. I mean, unless that's just part of your 5-year plan, you're buying once a week or whatever, good for you. But I think that there's too much uncertainty. There's not enough fear in the market yet. There's not enough hope in the market. Everyone's just kind of in the middle on all of this stuff. And I think that to me does not bode well for like, hey, this is my last hurrah. I'm going in for the long term. I think there'll be better opportunities. Could be at the same exact price, but if it's further down, if it's in a couple months and it's the same price, the chances of it going up may be a lot higher because we're going to have more innovation. We'll have more time for that innovation curve to pull it up. You see what I'm saying? So the bear market may flatten out. It's called the flattening of the curve, which is always a good sign for long-term growth. So I would say this is probably 7 to 8 out of 10 on the speculative scale. Not for everyone. I can't stress enough. If you don't know what to do, don't do anything. It is truly the most profitable advice you will get in crypto over the long term. All right. Now, one of the coins that I was talking about was EOS. And EOS obviously had a big run, sold some back here. I still kept half my coins, as many of you know from Twitter and all that sort of thing. And it is it's showing a bit of strength, relatively speaking. You can look at the coin Mart Cap. EOS is having probably the smallest drop of some of the top coins. Part of that is the fact that they're coming out with their mainnet on June 1st, which is in a couple days from now. They just got their USDT pairs on Binance, so there's going to be a lot more liquidity, a lot more volume. And frankly, I think that EOS is still pretty, not hot coin, but I think that it's still holds, people are still holding on to it. People are still buying it because they're like, man, maybe this will be the new Ethereum. This still has a shot at going really big. And so for those reasons, I think that EOS may creep along here. But what I am going to do is I'm probably going to implement some stop losses pretty soon, especially depending on what happens over here on this chart with Bitcoin. Because while I do think that EOS may have some potential, I'm just not convinced that this is going to be the time that it goes big. I think that when you look back, I mean, look at this. Look at that previous resistance line that we didn't quite get down to. So for anyone listening, that's right around the 13,000 Satoshi level. I think that would be when I actually buy more and like really ramp it up for a long-term move. But in the meantime, I think that I will just sit back, watch this. If Bitcoin does come back and show some strength back into this triangle for a short-term move, EOS could actually pop up and get some pretty quick 10, 15, 20% scalp out of it. If not, I would expect it to drop down to this support level pretty easily, pretty predictably. Takes us over to the coin Mart Cap. You can see, guys, like there's not a whole lot to talk about right now because when you look at the news, you look at Twitter, you look at what's going on in the blockchain world. Frankly, it's just there's not a lot of good news to talk about, and there's some innovation happening, but I've learned over my 8-year stretch as an entrepreneur, many of which are in the marketing world, that it is a huge waste of energy to try to convince people of something. And so what I do is in these videos at this point right now is to show you what I'm doing, which is really trading and watching the charts, because that's with all the news and all the sentiment and everything, it all comes back to the chart for now. And that'll change obviously as things evolve. So just quickly going through coin Mart Cap. I think that there's a lot of people that are like, oh man, you're never going to see alts this cheap again. I think that we've heard that so many times now that that's not a very good strategy, so to speak. Is that if you're in it for a long term, that's great, but you need to have some shorter term strategies on why you're buying something when it comes to altcoins at this point. And so what I did, which I want to share with you guys, you may remember a couple weeks ago, I talked about how you start to notice patterns in crypto that are about how money is going to be made. So when we look at Bitcoin, we started to see, we saw it peak, and then we started to see the price start to come down a bit. And we talked about how the bulls were having a really hard time kind of propping this price up. You remember in late April, everyone was like, dude, it's alt season, it's going to be insane. But it didn't really have that same energy. It was kind of like, this is going to fizzle out. And so we talked about how in this market, people are always going to find new ways to get yield. I think that that's why you see a massive increase in margin trading. You see a massive increase in high frequency bot trading. And I think that you also, one of my theses was you're going to see all these new exchanges that have very lenient rules with coins that allow for potentially questionable behavior, especially with fake volume, to prop up prices. And my idea was that some of them were going to be in China, specifically with Huobi, right? And this came from doing a bunch of research, both in the charts and also just reading articles and Reddit posts and stuff. And so what I did back in May 2nd, I think I did this, purchase May 2nd, is I created a fake volume fund. And there's two pieces to this. The first is I want to show you that, if you have a good thesis and you can prove it, it can often outperform the benchmark. In this case, you can see the fake volume fund grew by 14.43% and Bitcoin lost 20%. So I beat Bitcoin by 34% by going off of this off of this thesis. Now, I got nothing against any of these coins. I have nothing against Huobi. This is just data that I gathered and I decided to make a move on, right? And also I didn't buy one Bitcoin of each. This is just used for to make it easier, right? The amounts that I bought are different than this. So just FYI. But the fact remains that if you have a thesis on something in the market, not only can you make it the idea, you can actually go and you can put skin in the game. And that's what I did. And it worked really well, as you can see by looking at this chart. So what does this mean for you? Well, one, I have no idea if these coins are going to do well. For anybody listening on the podcast, these are all coins that are primarily on Huobi, or at least they have most of their volume on Huobi. And it doesn't seem like they have anything of value, even though they have a large market cap. For example, so there's Huobi token, which is kind of like the Binance token. You need it just to be able to use it. There's Nebulous, Cortex, Y-Keychain, Deep Brain Chain, CyberMiles, All Sports, and Rough. I have no idea what those coins do. Maybe they are the most professional coins in the world. Whatever. My thesis was about Huobi and fake volume. And while some of these coins didn't perform well, the ones that performed really well brought up everything else. So, that was an interesting piece of this. So what you can do, and I would encourage people to start thinking this way, because it will help bridge the gap between individual kind of quote stock picking or picking winning coins and starting to think about building your own index funds, is make a thesis on something and then make a fund around it. Make your own fund, buy it, track it in Excel, right? These are not hard to make. You can just spin these up in a Google Sheet. So for example, maybe you're like, I think privacy is going to be a big theme. Maybe you think that, I don't know. So you would go into CoinMartCap and you would find all the privacy coins and you would put them together and you would buy an equal amount of privacy coins or a weighted amount of privacy coins. And that would be your privacy fund. Maybe you have an exchange fund where you buy the exchange coins on everything because you believe that exchanges are going to do really well over the next year. Maybe you do one that's based on decentralized exchanges, etc., etc., etc. But when you have a thesis, especially one that's its foundation is built on increasing price, which is what fake volume would do. It's not always a guarantee, definitely not a guarantee, but it is an interesting test. And it does allow you in times like this, when instead of being like, man, what's going to have a Bitcoin? Which altcoin should I buy? How should I time it? You can start to apply new decision processes and you can start to get more value out of your time right now so that you can put together some longer term ideas with the intention of how do I just beat Bitcoin? Because if you beat Bitcoin, you're going to make Bitcoin. You're going to earn Bitcoin. Even if Bitcoin goes up and down and USD dollars or euro or Australian dollars, wherever you're calculating it in, if you can create a fund that can beat that, you're generating a bigger pie, right? And that's a very good position to be in. So I thought that was cool. I thought that was a fun thing. I didn't kind of open this up early on because I didn't tell everyone like when I bought it all, because then you got a million people copying it and it could affect the prices. But I do think that this is an interesting experiment, and one that I will probably continue to experiment with down the road and continue to report it back to you guys. That being said, I hope you all have a great day. Happy Monday, Memorial Day, for everybody who served in the armed forces, especially in the United States, as my home country. I want to say thank you very much. I have family members from the armed forces, and I would not be able to do this. We would not be able to do this if it wasn't for you. So thank you very much. Happy Memorial Day. I will see you guys tomorrow. Peace out.